Hi traders, welcome back to another YouTube video. So if you're an inspiring trader, make sure you watch the entire video because I believe this will be one of the most important lessons I publish on YouTube for all of you. So in this video, I'm going to talk about 5 key lessons or 5 key reminder to any of you if you're currently in the journey to become a profitable trader. So first thing, these are not 5 things that many people talk about, but I generally believe once you master and really understand these 5 different points, you will start to grab a feeling of, hey, actually profitable trading is not as difficult as I thought. So the first point is, let me put on the text. Right, so psychology is secondary. Understanding of price. So most traders, when they come to me, they often have one common reason. They always thought, hey, I've got something wrong with my psychology here, and that's why I need your help. And I need you to help me fix the psychological aspect of my trading so I can become profitable. The first thing when I receive questions like this from some of my, every Trade Club members, we go through a series of Q&As, right? I'll ask them, what's your background, what's your experience, what aspects you're really trying to improve, what's your current situation and all that. So when they tell me psychology, the first question I'll ask you, hey, define your strategy in a few sentences. And you'll be shocked that majority of them, they cannot define. While strategy is not the most important thing in profitable trading, but you at least have to know what you're doing in order to become profitable. Let's put edge aside, but if you don't have a proper strategy, if you don't have defined rules or criteria that tell you when should you be staying out of the market, when should you be getting into the market, there's no way you can become profitable. Like what we always say, in order to become profitable, you need to be like a sniper, not a rifle. A rifle, when you're blindly shooting bullets all over, you just don't have, you don't have the one goal, you don't have the one point that they are good at. Successful trader, if you look at majority of them, they are not market wizard. They're not someone to say, hey, I can master every single market condition, every single market cycle, whether if the market is contracting, expanding, whether if it's trending, whether if it's in a range bound situation, whether if it's in a choppy market. No any single successful trader, unless it's algo trading, unless it's pure AI trading or quant trading, they can ever do that. As a retail discretionary trader, our main goal is to master that 1 or 2 conditions that we're really good at, and we press hard. That's it. So remember, you don't lose money because of psychology. You lose money because you don't have an edge. Second point, price position will fix almost everything. So price position is a term that I created within the 1% Trade Club about 1.5 to 2 years ago, because throughout these 2 years of running the 1% Trade Club, throughout these 6 years of live trading, I realized that in order to become profitable, in order to achieve a positive edge, to have an edge in the market, it's a lot about fine-tuning. And price position is one thing that majority of traders, they don't even know what it is. So it'll be sort of my first time talking about this term and bringing it up to YouTube, just sort of give back to all of you. So what exactly is price position? So let's say if today you take a position right there, let's put strategy aside, let's put time frame aside, let's put everything else aside. Imagine you just enter a position here based on XYZ reason. Let's not bother about what reason it is. Price position means where is your current entry level in relative to the nearest high, nearest low. Remember, nearest high, where is your entry level in relative to the nearest high and low major resistance or support. Why is it so important to ask yourself where is the nearest high or low? Because of one simple thing, which is risk reward assessment. To me, previously when I talk about risk reward, the importance of risk reward, in one of my previous video, I've seen one comment say that, hey, risk reward is not important as long as you have an extreme high win rate. Yes, of course. Even any newbie trader can say the same thing as well. But the key thing is, why do I care so much about risk reward? Is because trading to me is a business. Everything involved risk in life is considered a business. So in trading, let's say today I'm risking $5,000. I risk $5,000, and in exchange, the first question you'll be questioning will always be, how much can I potentially get? Imagine today you are trying to open up a business. You say, I'm putting in $5,000 of risk, and that person, that you could be that director, that investor, tell, hey, if you invest $5,000, you can potentially make $500 in return. But in the worst case scenario, in the worst event possible, you might lose your entire $5,000 investment. Would you take it? I believe any single wise business person, if you hear this proposal, you might be running 10 straight away. The same thing goes to trading. The same thing applies. When I'm putting in $5,000 risk, if it doesn't give me at least a $10,000 or $15,000 potential reward, knowing that if something goes wrong, this entire $5,000 investment will vanish, I wouldn't touch it. But if today the market tell you, hey, if you put in $5,000 risk, there is a chance where you could double your risk. You could 4 times multiply your reward. Would you take it? I'll say, hey, maybe I can consider. But of course, risk reward assessment, price position assessment isn't the entire thing, but is one of the main aspects that tells me that, hey, this trader is a business person. Because sometimes there will be traders coming to me and say, hey, Neoh, can you invest in me? All of that. I used to invest in different traders as well. It's not a lot of capital. It could be 10, 20K, but when I'm looking at someone else's track record, the first thing that I observe is always a few elements. First thing, how does this trader handle drawdown? When he goes into drawdown, does he go bust and just completely revenge trade, blow up the account and all of that? Does he has a proper drawdown management skill? And also at the same time, does he has a positive risk reward? So I care a lot about this. So now you might be asking, hey, how does price position matter so much? Why does it matter so much, and how does it link to risk reward? So listen to this. So today, if let's say you're entering here without assessing that, let's say you're entering on the 15-minute chart without assessing the 4-hour chart, what the common problems will be, many traders, they will say, hey, I saw a break and retest on the 15-minute. The moment when they go onto the daily chart, they forget one thing. Market, let me put on the replay again. Sorry, something went wrong. So assuming they get in here, and then right now they go onto the daily chart, they realize one thing, hey, on the 15-minute, it's looking decent. Ignore the time frame again. I was on the 4-hour just now. So let's say we're on the 4-hour, you look for break and retest. For new traders that don't assess their price position, they'll often get trapped into chasing on later trend. And that's one of the things that I personally try to avoid. It's not that you cannot. There will be trend that keep running, it keep going up and up and up and up, or down, down, down. But the problem is, what's the probability of price just continue running without pulling back? Most of the time, a healthy trend will lead to a healthy pullback. A 50%, 61%, 61.8% retracement. Let it be whatever the figure. But if you don't assess it, what happens is, once you go into daily, you say, hey, market is on a fresh high. If I were to get in there, there's a few question marks. There's a few questions. First thing, what's your risk reward like? That's the first thing, because your price position is so poor that your risk reward becomes again also poor. Second question, okay. Second thing, what's your expectation? Because when I'm looking to get into a trade, the way I generate my thought process is, hey, if I today enter this position right there, what's my expectation like? What's the scenario planning's like? Because imagine if I were to enter here, the biggest question that I ask myself is, hey, what's the likelihood of price after running up for thousands of pips, let's say 1, 2, 3,000 of pips, and it continue pushing for another 500 pips? Would it really happen? You know, a lot of times after you assess it, after you really study your price position, you say, hey, yes, I know it might look like a good setup on a lower time frame, but now I'm on a daily, I don't think it's a good setup anymore because price is pretty overstretched. Again, it doesn't mean that an overstretched market couldn't get further stretch, couldn't stretch further, but high possibility it will either hold or it will slow down. So remember this, price position assessment ultimately affects every single thing here. Remember, price position means where's your entry price in relative to the nearest high and low, major resistance or support. So today, let's say you have a setup where you think, hey, I don't have a lot of confirmation, but the price position is really good. Let's say you're looking to go short, assuming price does this. It's approaching this area, and you say, hey, I'm looking to go short here, but when I'm looking at the left, I don't have much confirmation. That's the first thing. Second thing is, I don't have much, confidence to pull it. But because if you're looking to short here, the price position is that good, the potential, the opportunity present itself is massive. There's a potential 1 to 5, 1 to 10 risk reward if you're being correct. So if I were to reverse engineer and ask you, would you rather trade on a scenario A, where you blindly chase a trend without assessing the price position, or would you rather take an attempt and see if market might end up turning into a min reversion situation where it just completely reverse back to 155.94? Which one would you take? So this is scenario A, this is scenario B. Me, as a consistently profitable trader, as someone who's coaching 110 traders, my trade club members, they'll be watching this video as well, I will say I will be choosing B again and again and again. But of course, this is just an example. We cannot just blindly say, oh, if I go short, I can have a 1 to 10. You need to have the thesis behind it. You need to have actual logic, actual thought process to support your decision. But I hope all of you gets why do I always emphasize on price position assessment. Okay, so first point, we talk about psychology is not important. Traders just don't have an edge. Second thing, price position would determine everything. What's the third point? So the third point is whatever you are looking, whatever you are reading from the internet, they're all basic. Before I get into this point, some of the hater, you might say, hey, you sell the course as well, whatever. I don't sell a course, I sell a community. And within the community, I provide my trade club members a few hundred lessons, 300 plus lessons, and all of that. I don't sell a course. If I were to sell a course, I could easily, let me just again show all of you, I could very easily, just give me a a second. I could easily pull up all of my content, hundreds of videos. You see we got 490 videos inside. I could turn all of them into a complete advanced course and charge it for $5,000 or $4,000. But I don't do that. Why? Is because again, I don't want my course to be published outside and then it turned out just someone download it and put it somewhere and it becomes a really cheap, resource. That's why I protect the resource. Get back to the chart. Third point, whatever you're reading from the internet, they're all basic. I've bought a lot of courses. Previously there was one comment asked me which course did I study at the beginning. I try not to call the course's name, the coach name, whatever. Because I find them not helpful, maybe you will find them helpful. So I just don't call it to prevent any misunderstanding. But anyway, majority of the things you study online, they're just pretty basic. Candlestick patterns, set and forget strategy by LXG on a on a false challenge, all that, turning $100 to $1 million, all of these different things, they are just for pure marketing purposes. All these fancy terms like ICT, I'm not here trying to say ICT is not good. But if you look at my current approach, it's pretty basic. I just go through the really tough way, which is I have to back test all of my patterns a lot. I'm talking about 500 to 1000 sample size on each of the pattern on various time frame, on various variation. All my trade club members know how much time I spent on back testing in my early phase. All these are just pattern strategies based on logic behind the chart, which is very simple. It could be as simple as break and retest. It could be as simple as trading the pullback. But why does it work so well for me? Because they're easy to follow. When you have a strategy that is overcomplicated, they won't make money in the long run. Why? Because the big players, they just don't care. When people talk about different concepts, different things, that I'll just question one thing. Do you think this particular concept that you're trading, the bigger players really care a lot? Sometimes they cannot answer me. So the answer is, if they don't care, who gives you the liquidity? What makes you think is a valid pattern? So why do I emphasize so much on studying support and resistance, studying price response, all that? Because these are things that people are also reading. And that's what gives it an edge. Another thing is, lots of things you see online, it could be candlestick pattern, it could be support and resistance. They are just teaching you the very foundation, because many coaches out there, many courses out there, they're packaged in a way to just mass selling to everyone. It's just for marketing purposes and all that. So in order for one trader to become really good, in order for a beginner trader to become an advanced trader, an elite trader, for me personally, I can tell you, I spent so many hours and hours and hours and hours just fine-tuning different strategy. So trading is not as easy as you thought. If you're currently watching this video, you think by buying a courses that might cost $2,000, $3,000, $4,000, $5,000 and studying them, you will get profitable. The answer is no. The only way you can become profitable is to actually have a strategy that is heavily back tested, and you really learn how to understand the price flow, understanding different things like price responses. These are terms that I create within the 1%ers Trade Club, because over the year there's a lot of things that I've discovered, and they get to see me grow alongside as well. That's why we have so many hundreds of videos inside, because I make sure that me as a leader, I keep learning as well. And I'm here telling all of you aspiring trader, if you think trading is easy, if you think when you get to my level of success, or people who are beyond me, you think we are slowing down, no. I spend even more time than any of my Trade Club members to test out different things, to fine-tune things, to review my journal. Why? Because me as a leader, me as a profitable trader, I need to move forward. I need to continue maintaining the momentum. It's not about, oh, you get to a certain level of success, you slow down. No, you literally have to keep learning and humbling yourself. So price responses, price behavior, these are important terms that not one really tells. What I just say, price position. Then we also have entry position. We also have the OMSS. These are various things within our trade club that I literally have to go out, back test it, forward test it, discover it, create a name, so that everyone could sort of simplify. So get to the next point. So the third point is whatever you're reading from internet, they're basic. Now let's talk about the next point, which is successful traders simply know when to press hard. So this is also something that most traders just will forever not understand because they're not being educated the right way. People imagine successful traders are traders who have it could be better technical skill, it could be a more advanced market scanning tool, it could be more resources and all of that. Not exactly. If you study some of the most elite trader, the only thing they are doing differently is when they identify a high probable setup and they heavily study their data stats. Once they identify a high quality, or what we call a high probable setup, an A+ setup, and based on their data they know that, hey, this is indeed an A+ pattern appearing, stars aligned, they go heavy on the position. And that's why previously also when I first introduced the concept of of a linear risk per trade system, when I first discussed about this thing here, I received a lot of negative feedback. A lot of people say, oh, you should be risking a static 1%. Yes, you can, but you'll only get you to a certain point. What makes the elite trader, the successful trader, so successful? Because they're going extra miles compared to you. The fact that you're risking 1% static, because most of the traders think, oh, it's a probability game, it's a coin flip game, you will never know the next trade if it's a win or loss, even if it's a high quality one, and that's why I risk 1% static. These are simple thinking, these are basic things. So when it gets to a point where you really understand your setup so well, you build that experience-based intuition. Like one of the best example was last week. I've been in a drawdown for 1.5 months, and I was able to capture an Aussie yen short in front of the in the 1%ers trade club. Everyone know that. And I made about $64,000 in 1 week shorting Aussie yen, shorting Aussie dollar. How was I able to do that? But while that 1.5 month period of drawdown, I lost only about $16,000 again. They all know that as well. So how exactly was I able to capture that? It was simply because I understand my stats very well and I know exactly what I was doing. I've built a solid layers after layers and layers of foundation that I know, hey, my winner is about to come and this is a high probability setup and I need to press hard. I'll just show all of you the proof here within the trade club as well, just to let all of you know what I say was true. So if you look at this, this is the 1%ers trade club. We have 111 subscribers inside. Within our setup channel, you see I capture Aussie yen short on this one for about 5.8 R, made about $21,000 across one account. I have other accounts. Then I get it onto a re-entry for 1.6 R, and if you scroll down, you can also see, if you scroll down here, $6,000 on gold. Then I also say that I'll be shorting AU, as one of our members also called the exact same setup. I shorted based on TPF formation, a pattern that we use within the trade club. Then you see I call the trade on the entry and also on the exit. You can see when I scroll down, I told all of them, hey, I'll be closing out my AU short for 3.17R. This is again all real life. You know, there's no such thing as, oh, I call, you know, all of a sudden I made, you know, how much money. These are all hindsight. You know, so I call all the exact setups on the spot, so it's real. So go back to the chart. So remember, back to the point, successful traders, they just know when to press hard. The elite trader, they know what's the A plus setup, and when they have it, it's not like, oh, A plus setup, they risk 10%. The regular B setup, low quality setup, they risk 1%. We don't have a large gap, but at least on the A plus setup, we are willing to risk a little bit more. And this is all based on calculated risk. We don't over risk, we don't overexpose, we simply know what the good setup is. We press a little bit harder. That's one thing that I always highlight to my student, which is if you don't make money on your winning trade, you will never be able to make money as a trader. And here goes the final point, as the video goes a little bit too long, 26 minutes. Drawdown management will determine your success. Just put it this way. So every single good trader, they have one common trait, which is the way they handle their drawdown. And there's no other way around. If your goal is to become a consistently profitable trader, the word consistent derived from what? Discipline, having an edge, knowing exactly what you're doing, and have a proper risk management. Now, risk management isn't complete. You know, most traders say, I risk 1% per trade. I know exactly what I'm doing. No, risking 1% per trade is the foundation. When it goes to certain level, like what I just say on point 4, you will start having a linear risk per trade system. When it goes more advanced, you even know, you are able to even to tell when will my exact drawdown end. You know, that's how, I don't say accurate, but once you get to a certain level of experience-based intuition, you have built that layer of foundation, you know exactly what you're doing. So drawdown management means, how do you manage your mindset? How do you have the ultimate self-control when things go south? Most traders, they are super happy, super excited, super pumped. You know, they do their journal, they do their daily game plan on their winning day. But the moment they get into drawdown, guess what? They go bust. They completely lost control, and they just start doing silly things and end up just blow up the entire account. So remember, what determines a good trader is how well do you handle your drawdown. Are you really psychologically prepared? Do you really have an edge? Most traders think they have an edge, but in actual, they don't have an edge. So I hope this video, these 5 key points will really help you as an aspiring trader. And again, my job here on YouTube is purely to inspire, to provide proper education. I hope all of you learn something new. And yeah, I'll talk to you later. If you like the video, please don't forget to like, share, and subscribe. Bye bye.